Welcome back to Explain the Charts. Today we're taking a deep dive into the GBPUSD pair, analyzing the latest news and the chart data to understand where this pair is heading. We'll be examining the daily, hourly, and 15-minute charts, identifying key price levels, support and resistance zones, and pinpointing the potential for bullish or bearish trends, both short and long-term. Our analysis will focus on the current market sentiment, recent economic indicators, and the correlation between these factors and the price action on the charts. By analyzing these interconnected components, we aim to provide you with a comprehensive overview of the GBPUSD landscape, helping you make informed trading decisions. Let's start by taking a look at the current news surrounding GBPUSD. A quick Google search reveals that GBPUSD has rebounded above the 1.3150 level due to renewed weakness in the US dollar. This rebound comes amidst growing expectations that the Federal Reserve will begin cutting interest rates in September. Analysts are anticipating a 50 basis point reduction, which could further weaken the US dollar and provide support for GBPUSD. However, GBPUSD remains trapped within near-term congestion, with technical analysis suggesting a bullish bias above the 200-day exponential moving average, EMA, at 1.2725. The immediate downside target for short sellers is the 50-day EMA just above the 1.2900 handle. Now, let's zoom in on the 1-hour chart to gain a more granular understanding of the recent price action. As we can see, the GBPUSD has been consolidating around the 1.3150 level for the past few hours. This consolidation suggests a period of indecision among traders, with neither bulls nor bears having a clear advantage. The recent rebound from the 1.2900 level indicates that the bulls are still active, but they haven't managed to break above the 1.3250 resistance level. We can observe a series of higher highs and higher lows, indicating a potential upward trend, but the lack of a decisive breakout suggests that the bulls may be hesitant. The current price action suggests a potential breakout in either direction, making it crucial to monitor the key price levels. If the GBPUSD manages to break above the 1.3250 resistance level, it could signal a bullish continuation, potentially driving the price towards the 1.3400 level. Conversely, if the price drops below the 1.2900 support level, it could signal a bearish reversal, potentially dragging the price towards the 1.2725 support level. Now, let's take a closer look at the 15-minute chart to examine the intraday price action. The 15-minute chart provides a more detailed view of the recent swings in the GBPUSD pair. As we can see, the price has been moving in a relatively tight range for the past few hours, indicating a lack of clear momentum in either direction. The bulls have been attempting to push the price higher, but they have encountered resistance at the 1.3150 level. The bears have also been active, attempting to push the price lower, but they have failed to break below the 1.3100 support level. The lack of a decisive breakout in either direction suggests that traders are hesitant to commit to a clear direction. The price action on the 15-minute chart suggests that we may be at an important juncture for the GBPUSD pair. Traders should be prepared for a potential breakout in either direction, with the 1.3150 resistance level and the 1.3100 support level acting as key price levels to watch. If the GBPUSD breaks above the 1.3150 resistance level, it could signal a bullish continuation, potentially driving the price towards the 1.3200 level. Conversely, if the price drops below the 1.3100 support level, it could signal a bearish reversal, potentially dragging the price towards the 1.3050 level. It's important to monitor the volume and the momentum indicators to identify potential breakouts and confirm the strength of the move in either direction. In the short term, it appears that GBPUSD is likely to remain within a range, but traders should be alert for any signs of a breakout. Traders looking for long-term opportunities should be patient and wait for a more decisive breakout before taking a position. Now, let's revisit the daily chart and zoom in on the past few weeks to gain a broader perspective. The daily chart reveals that GBPUSD has been on an upward trend for the past few weeks. This upward trend has been fueled by the weakening US dollar and positive economic indicators for the UK. The bulls have managed to push the price above several key resistance levels, indicating a strong bullish sentiment. The recent pullback from the 1.3250 level has been relatively minor, suggesting that the bulls are still in control. However, we need to pay close attention to the 1.3250 resistance level, as it represents a significant hurdle for the bulls. If the GBPUSD fails to break above the 1.3250 level, it could signal a bearish reversal, potentially dragging the price towards the 1.3000 support level. On the other hand, if the GBPUSD manages to break above the 1.3250 level, it could signal a bullish continuation, potentially driving the price towards the 1.3500 level. It's important to note that the bullish trend on the daily chart is supported by positive economic indicators, which could reinforce the likelihood of a bullish breakout. However, traders should be aware of the potential for a bearish reversal if the price drops below the 1.3000 support level.